The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we got started with trade for the week, Monday session brought about what I would call maybe a little bit of stability in the grains and oilseeds, at least, as we saw a fairly mixed day there, but continued immense volatility in the stock market, energies, metals, particularly gold. We saw cattle and hog futures under pressure. Again, a lot of noise with the tariffs and the back and forth nature of the headline risk there. Let's get an update on how things are looking as we start the week. Joining us for market analysis, John Heinberg with Total Farm Marketing. And John, man, oh man, it's been an interesting few days in this market trade. I know we talked last week after the USDA reports, and then here we are with all the tariff headlines and the big drops in the stock market and more. But to my point, as I opened, grains and oilseeds kind of stabilized on Monday. I guess I'll take that as a win. John, what do you think?
Yeah, very much so. And I mean, let's go look at last week, and what happened in the corn market overall. I mean, obviously beans took the brunt of this in terms of tariff news and the issues with China and longer term demand and all those fun pieces that are just weighing on that soybean market. But, corn plowed through that fairly well, finished actually higher on the week in old crop corn, and another nice day of follow through on that old crop contracts here today, picking up a couple pennies on that May and that July contract at the close. So really corn's been pretty resilient here. Now we saw some good strength in the wheat market, at least off and on during the session today. It's finished with decent gains there. Soybean market a little bit mixed here today. So, at least we see some front end support on this. Not a shock. We're seeing the issues in the deferred contracts in terms of pricing. Realistically, when we start looking at with this tariff picture and where we are, soybeans, most of those, obviously with soybeans, it's about the Chinese beans. Most of them are already shipped. There's about 30 million bushels left that needs to be shipped out. So there's a possibility we see some growth there. But, the demand is still running well ahead of expectations. USDA report coming out on Thursday. Maybe they make a few adjustments. We'll see how that plays out. Corn side, obviously, we don't have any corn going to China in that regard. The rest of the world's been very good about purchasing U.S. corn. Because of just the needs that out there. And again, same thing with that report coming on Thursday. We got the grain stocks numbers. There's some room to probably make some adjustments. Can we get carryover under 1.5 billion bushels on Thursday's report? So there's some reasons there that the front end of these markets is looking getting a little bit of buying strength right now, at least in those two overall.
Well, and thinking about the tariff picture wrapped in with, say, weekly export inspections, I know we were at the higher end of trade guesses for quart of beans on Monday. I haven't seen any cancellations as of yet, John. Maybe I missed them, but it seems like things like that right now when it comes to exports are fairly quiet. So maybe some optimism and some support there, specifically on the corn side, I would think, just with how that market is held up, but even soybeans too, possibly, John.
Yeah, at this time frame, again, we haven't seen the cancellations. You see some net reductions on the weekly reports, but again, they're usually minimal amounts, or some of them are getting shifted to a different source in terms of where they're destined to. And, so it's kind of hard to gauge really where we're at, but in the big picture, things like I said, we're soybeans. We've got a lot of beans shipped already. That would be the biggest concerning market, I would say. Obviously, with this large South American supply coming here very, very soon, or starting to come into production into harvest windows, in the next few weeks, and that could be something that's going to weigh on that old crop market for beans. But at least right now, just the way the market was handling today, especially, we saw some buyers come back into that front of the beans. Some of that is the fact that Brazilian premiums have jumped because of the potential for more demand. And with that adds a little bit of value to our bean market as well.
Well, I know everyone's talking tariffs, and I mean, we're talking it here as well, and we could lean into some of that with the outside markets. But in terms of the grains, weather, of course, is a big deal here. And It's still early on the calendar. I'd say it's still fairly benign for many areas, the Western Corn Belt in particular, Northern Plains, et cetera. But you think about all this immense rainfall that we've seen in the Mid-South and the Delta regions and up through the southern half of the Eastern Corn Belt and more. It's been talked that some, corn and rice acres have been lost in Arkansas, for instance. I mean, at what point do these markets stop trading tariffs and start latching on to the weather stories here in the U.S., John?
I think some of that's going to be driven by what the outside market's doing, and we continue to see massive volatility out there. It's going to make it real hard for any rallies to kind of come into play. I mean, we just saw it in the equity markets today with that headline about tariffs being delayed 90 days, and we saw the equity markets take off, and corn went to the highs of the day. Soybeans were, pushing double digits higher, and then obviously we got that story was refuted pretty quickly by the administration, and we just saw this thing roll over. So I mean, that's still sort of part of the process is going to be just dealing with all this outside distraction. Now, some of the things you brought up, obviously, in terms of the weather and what's happening there, again, there's going to be a wait and see. It is still early. I know we hit some of the first planting dates in some of those southern regions that got a lot of rain, and that's not putting it mildly in terms of the amount of rainfall that came through that core of the southern corn belt, and it will give us some problems somewhere. Now, one group of analysts I was listening to was, what about the prospects that we get more corn acres out of that? Because some of the early soybeans that typically are planted now, we're starting to see that shift as an industry trend. Plant soybeans first to catch those growing days a little bit longer when things are right. Well, now they're going to get pushed back. Plus, with the market dropping the 975 last week, the motivation to make sure those beans get in the ground kind of fell apart a little bit. And, maybe we see some acres shift around there. Maybe that's some of the reason why deferred contracts or corn just couldn't find any footing today. Could we be looking at a 96 million acre number when we get to the end of this thing because of some of that heavy wetness in the south? So those are a lot of variables that are going to shake around. We do get our first set of kind of crop progress numbers today, so at least we'll see what some of that southern planting looks like and make some assumptions from there. But we got a long way to go, and it feels like things are going to dry out. It's going to take a little time. But guys are starting to get antsy, as a lot of people I was talking today were working on corn planters or getting ready to roll here as soon as the weather turns favorable and those soil temps get up. We'll see those corn planters rolling quickly.
Wheat markets, you mentioned, had some decent support on again and off again throughout Monday's trade. Sounds like maybe some of it was weather driven with frost and freeze potential here early this week. But then I always think about this though too, John, that wheat complex or that wheat crop has got 9, 10, 12 lives. So how much do we really have to worry about a frost or freeze event here early this week, especially the central and southern plains?
Yeah, and then really we didn't finish that strong off of those types of reports, a penny or two higher in the KC wheat. But the interesting part about that wheat market, it's kind of more demand driven right now. U.S. wheat, especially the SRW, is very competitive on the global scale. And we saw really good export sales last week. Inspections were fairly solid again this week as well. You got a drop in the dollar index because of the tariff situation to hopefully kind of balance some of those tariff costs out. So that's one of the things this market's watching right now is the fact that can we continue to get some pretty good demand for U.S. wheat? We got plenty of supply in that regard. So, hope we can get some bite there. Plus on top of that too, we saw some decent moves in European wheat and prices today and gave that wheat market a little bit of a boost. Now, sometimes the wheat market can be the one to turn the corner. We'll see if we can get some follow through on, especially on the Chicago wheat today or the SRW with a good close that we saw here this afternoon. So that'll be a key piece of this puzzle. But again, we go look at the spread between corn and wheat. It's gotten extremely narrow again. That way that wheat market may look a little bit undervalued here. And maybe that was some of what we saw today was just a little bit of value buying, maybe coming back into that wheat market.
Stocks are so volatile that it's hard to really gauge that, and I don't really want to get into that. But I am curious your thoughts on crude oil getting down here near the $60 a barrel mark on West Texas Intermediate futures. Is that something in itself that could be either supportive or negative for the grain and livestock complexes, John?
Yeah, it's an interesting variable when you start putting together. Obviously, when you're talking corn and biodiesel and things of that nature, low energy prices tightens up profit margins for some of those industries. So that comes into play. Again, crush right now for grind for ethanol is very good. And obviously, we know what we're doing on the crush side for the biodiesel side. So we'll have to kind of watch how that plays out with some of the margins that are out there, especially if we start seeing some run in the old crop corn price against it. That could slow down one of those demand components, which is the ethanol side, especially with stocks where they are in terms of the ethanol supplies being fairly heavy in this window. So the other side of it too, though, it could be something that comes into play and helps out some of the livestock sector. Obviously, if that trickles over into gas prices coming down and bringing some money back to the consumer, that keeps that demand for beef and pork as well as poultry kind of maybe a little bit more on the table if we got a little extra funds to do something like that. The concern about tariffs is things are very inflationary. At least that's what the media wants to tell you. But if you look at since the tariffs come out, big drop in pork and livestock prices, got drop in crude oil prices. Obviously, the grains hung in there for the most part, but we saw a lot of commodities come down in value because of the potential issues on the marketplace, which really is not an inflationary play. So it'll be interesting to see how this all really kind of shakes out here over the next basically months. It's not going to happen overnight. In terms of what the path is going to be and how these things kind of play out in the commodity space in general. But that crude oil market coming down like it is, it definitely changes the picture here, I think, in terms of, crude oil demand, where we're going with crude. What are we doing here with the U.S. as OPEC made that announcement to, raise production nearly triple what the market was anticipating. And then on top of that, add the tariffs in for demand concerns and, set up a pretty good spot in the market for a pretty big sell-off in which we've seen.
John Heimberg with Total Farm Marketing is our guest analyst here today on Market Talk. Let's lean a little more into that livestock sector, John. More pressure in live cattle and feeder cattle futures on Monday. Looked like feeders even, I think we kind of hit the lows of the day right at the close, if I'm not mistaken. As you examine that cattle complex here, obviously concerning with how much we've lost in futures the last several sessions. I think a lot of it tied to the outside market fears. What are some of the big things, any key chart targets or more you are watching across cattle right now, John?
Hey, I'm watching some technical barriers. I'm going to focus on the June live cattle. We actually hit my first barrier today. It was around that 196, 195 area. We did close right, like you said, kind of towards the bottom of the day on that June live cattle. Feeders were a little bit off their lows in terms of their trade, but still a pretty disappointing close overall. So now I'm thinking, what's my next target? I thought we have a full correction. We go back down to the 100-day moving average June. That's about the 192 area. That's kind of when we fell apart the last time. We kind of found that area, tested through it, but it came right back over it. So that's a spot I'm really watching right now. Made a lot of position moves today in terms of, taking some risk off the table, getting some ideas about what happens if we get there. The fundamentals are still very, very friendly in this cattle market. The biggest question may be the consumer demand if things get tight in that regard. But right now, it sure feels like the consumer continues to want to buy beef and support that market overall. The fundamentals in terms of the cattle supplies are definitely in that there. So we get to that window. If we do hit that next level of support, that's probably going to be a spot. I'm going to start thinking about some call strategies, having some paper over top this market. So because the cash market, it's softened, but it's still strong. Feeder market is still aggressively strong, even though we've really softened on the technical side in futures. So one of the two is right. It's either the futures market or the cash market. And my money will stay with the cash market and the fact that this market could come right back up. So a lot of different questions getting asked right now about lifting coverage and protecting self and taking some money off the table and, all those things. So it's kind of a case-by-case basis in this cattle market. But if we get further correction, it's probably going to be a window that we want to get a little bit of length into that market.
How about that hog side of the equation, kind of tied in with some of the moves in the cattle trade? Maybe not as much as cattle futures have dropped, but still, I know pressure there as well. What are you watching on the hog side?
Yeah, yes. So the sell-off in the summer months of the deferred contracts is pretty impressive. I mean, and continuing to slide. I mean, you got a May-April spread right now that's May's a minimally traded contract, but usually it doesn't run too much of a positive, and it's $3 plus over the April contract right now. So or April's over May, in that regard. So we're really seeing some deferred selling pressure. That is purely tariff driven. Again, obviously the impact with the Chinese market, as well as the rest of the Southeast Asian market, Vietnam, Korea, those are good buyers of U.S. pork as well, and beef. So that's kind of what this market might be thinking about, keeping some of that pressure in the deferred contracts, that maybe we have some demand issues that could be brewing here. A lot of it is still technical. We talk about the funds all the time. If you combine where we were, now again, this was as of last Tuesday, when they put the commitment of traders together, but the combined position between live cattle, feeder cattle, and hogs was still at a record long for that time of the year. So that's one of the big concerning points in here. Funds need money to cover losses in other positions. A lot of these funds positionings have probably been sitting long since the 2020 years, when we hit those. We were $86 for cattle in 2020, and now we're peaking out at 200. There's some pretty good value sitting there for anybody sitting on those long positions, and it may be just one of those technical things that we're watching in both these markets, which will probably provide us that opportunity to get linked in. But right now, I'm not really sure exactly where that bottom is, especially the way that hog market's behaved here the last couple of sessions.
Let's head over to the dairy parlor real quick. Any notes for you on the dairy side of the markets, John?
That may be one of the more trade sensitive markets out there. But we saw at least a little strength in the cheese price today. We saw that May contract really take a punch here, again on the tariff issues, but maybe we got some bottom. I keep saying that because it feels like after I say it about a week later, we put a new one in that regard. So, but this is a spot, I guess, if a producer's sitting on some hedges, make sure you're kind of looking at your options in terms of what to do. Take the profits off the hedges, buy some puts underneath instead, and minimize some of that risk if this market does rebound. But at the same time, I don't know if you want to walk away from a market that may be the most trade sensitive market out there right now, at least in terms of trade with Canada, Mexico, as well as just the overseas trade. Again, to me, it's a market that's getting pretty oversold, and it feels like we got some room somewhere for this to climb, but that signal is just not there yet.
John, any final thoughts, anything you'd mention or reiterate to folks listening in here on the show today?
Watching these markets today, you can get yourself a bit of a whipsaw action, and just the biggest thing is stay clear in your picture, okay? Watch for your opportunities. Don't freak out when we get a headline or we have a big move. We're going to have good days. We're going to have bad days as this thing sorts itself out. I mean, we just saw that volatility in the stock market. Just saw the comment come through at the lows today. The Dow was down 4.4%. The high was up 2.5%. So put that together. That's a massive point swing, in that market. And we saw some of that even happening in the grains over this last couple of days. So we're going to have some massive swings at time to time. Biggest thing is just make sure you're clear on your plan and let the market just kind of work itself out and come to you. Last week I was starting to be a buyer in the grain markets. Just felt like, hey, maybe we've taken this a little too far here, given the demand and things that we were stepping in, both corn and soybeans, getting some ownership in for next fall, just as a window here to protect ourselves with some balance over the summer months. So, a lot of times the markets get the most depressing. That's when maybe there's the most opportunity in those markets. And so make sure you're just having conversations, think about your marketing plan and where can you find that opportunity, even though the prices themselves don't look the best at this time frame.
John, if folks want to reach out for a conversation with you there at Total Farm Marketing, how can they get in touch with you?
Feel free to give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
Always good to hear from you, John Heimberg, Total Farm Marketing. Thanks for being with us on Market Talk, and have a great week. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.